rearrange your charitable giving that you're probably already doing to get more deductions. Back in 2018, when they doubled the standard exemption, a lot of people that were itemizing their deductions can no longer itemize anymore. Yet if they just rearrange how they're going about doing that, they can probably go back to itemizing at least every other year. Let me show you how that works. Imagine you are giving money to charity this year and next year because you're consistently doing that. Let's say it's $10,000. And when you have your state and local taxes, that can show up on the itemized deductions. That's $10,000 as well. Perhaps you have some medical expenses that you get to deduct, and perhaps you have some mortgage interest that you get to deduct. Well, the standard exemption is roughly $30,000 for a retired couple. So you've gone through and given money to charity, paid the taxes, have these expenses that you think are deductible, and really they aren't really helping you out at all, right? They added up to $30,000, but guess what? The standard deduction is $30,000. So your donations to charity, which are amazing and wonderful, did nothing for you tax-wise. So just imagine, though, that you take the charitable deductions that you're planning on doing next year, and you did them this year, right? Somehow you gave $20,000 to charity this year. Perhaps you give a lot of charity in January, and you're planning on doing it again in January, but instead you do it in December. So you have the same amount to charity, $20,000 this year though, $0 next year. Well, 20 plus 10 plus 5 plus 5, that equals 40. And in the world of taxes, 10 plus 5 plus 5 also equals 30. So you went from having 30 of deduction standard, 30 of deduction standard, to now 40 of itemized deductions, 30 of standard deductions. Of course, I'm rounding for all this, but that gives you $70,000 total instead of the $60,000 that you would have had otherwise. That's an extra $10,000 of deductions every other year. If you're in the 22% tax bracket, that's $2,200 of tax savings. So rearranging how you go about making your charitable deductions, the timing of when you make your charitable deductions is a great way to do that. Now, a second piece of that, if you really want to turbocharge that, is to do something called a donor advised fund, where a lot of times when you give money to charity, and if all of a sudden this year you just doubled how much you gave to charity, and you're planning on not giving that money to charity next year because you already kind of doubled up this year, the charity might think, do you not like them anymore? You skipped a whole year. Or they might think, hey, you doubled the amount to charity this year, maybe you'll double the amount next year. So a lot of times what you're looking for is to keep the money that you're giving to charity consistent, but it's your tax deductions that you want to push into 1 year. And this donor advised fund is a great way to do it, where perhaps this extra amount that you gave to charity this 1 year just goes to that donor advised fund. You get the deduction because you have committed that money to charity, but then you can keep having that money be sent out monthly even from that donor advised fund. So it's as if the charity doesn't see anything different in their cash flow. It's just you're choosing when you pay the taxes so that you get the tax deduction all in 1 year. To turbocharge that even more is you could give stock or mutual funds that have long-term capital gains, where this amount of stock you might have bought for $5,000, now it's worth 10. If you sell it, that's a $5,000 capital gain that you'd have to pay taxes on. But you could gift the full $10,000 of stock, get that $10,000 deduction, and that gain that's sitting there that you would have paid taxes, you don't have to pay the taxes on right there. So as you're going through and bunching your charitable deductions and throwing them to 1 year, see if you have any non-IRA stock, non-IRA mutual funds with a large long-term capital gain that you can use to gift to that donor advised fund.